Hello everyone, welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red means below average performance. In the end, based on the total number of green, yellow and red star respectively, you can take a call to buy this fund or not. Please remember, all the fund parameters we are going to discuss here are based on 27th March 2017 data as reference, and we only review regular and growth plans of mutual funds. In this video, we are going to review fund name HDFC TaxSaver, which is a ELSS fund launched in 1996. Before going into review, let's understand about fund's objectives. The fund invests primarily in equities and equity related instruments and is ideal fund for long-term capital appreciation. It is a large cap oriented fund. It enables investor to avail tax deduction from total income as permitted under Section 80C of Income Tax Act. Now let's start the detailed review on each parameter. First, the fund belongs to HDFC Mutual Fund family, which is currently India's second biggest fund house in terms of asset under management, out of more than 45 fund houses, and was established in year 2000. So for being a pretty large and experienced fund house, we give a green star here. TaxSaver fund was launched in March 1996, which at that time was part of Zurich India Mutual Fund and was merged with HDFC in 2003. This means it is active for more than 20 years. In fact, it is among the 5 oldest tax saving funds in India. So let's give a green star here too for being a very experienced fund which has seen all market ups and downs. Fund is categorized in ELSS category as it gives Section 80C tax deductions for investing and has a 3-year lock-in. Moving to next, this fund has an asset under management of rupees 5,800 crore and ranks third biggest ELSS fund among a population of around 40. So this high asset under management shows investors trust in the fund's management and its performance. So definitely deserves a green star on this parameter too. Now let's talk about the Moolaha, that is the returns. We will first talk about the trailing returns from 27th March date and then talk about the calendar returns. In trailing returns, we can see the fund has consistently beaten its benchmark index, that is Nifty 500, across all 1, 3, 5 and 10 years, but has been behind the category average returns consistently in long term 3, 5 and 10 years. So trailing return performance of the fund clearly seems to be behind the line. Now looking at the calendarized returns of last 10 years from 2007 to 2016, which means returns from 1st Jan to 31st December of a calendar year, we see that there have been 3 instances when fund was beaten by both benchmark and category average, that is in 2007, 2012 and 2015, and fund has performed dismally in 2007 and 2015, being far from benchmark returns too. But all is not that bad. They had pretty good performance in year 2009, 2010, 2014 and 2016, where they have beaten both benchmark and category average returns by good margin. Even in bad markets of 2008 and 2011, fund could manage the fall better than the benchmark and category average. In 2013, it has given near category average returns. So now looking at this, overall fund's calendar year performance isn't bad, as they have beaten both benchmark and category average 6 out of 10 times and have performed better than others in market falls as well. So clearly they had some good years but some very bad years too, such as 2007 and 15, which may have pulled their overall returns down. So due to this patchy performance where fund has performed badly in few years and good in few other years, we give this fund 2 yellow stars on this parameter. Next important parameter is Fund Manager. Vinay Kulkarni leads this fund for more than 10 years now. He took the leadership in November 2006. Vinay is a BTech from IIT Bombay and MBA from IIM Bangalore and has been part of Fund House since 2006 as well. Vinay also leads three other equity-oriented funds since 2006. HDFC Core and Satellite Fund is multi-cap fund with 583 crore asset under management and has given above benchmark but below category average returns since last 10 years. And same is story with HDFC Premier Multi-Cap Fund, which as the name suggests is also a multi-cap fund with 289 crore asset under management, and HDFC Equity Savings Fund, which is an equity oriented hybrid fund with 620 crore asset under management. So if we see all of Vinay's funds together, we see same story, which is above benchmark returns but lower than category average returns. So even though the fund has an experienced and a stable fund manager, his overall performance record is not too impressive, and therefore this parameter deserves a yellow star too. Next parameter is top stock holdings of the fund and understanding the fund's diversification. As on 27th March, fund has 63 stocks in portfolio with top 5 contributing close to 28%. Current cash allocation is less than 2% and rest all is in equity. Fund has very good diversification in portfolio and weightage of top 5 companies is little less than our benchmark of 25%, and hence we give this parameter a yellow star. Next parameter is sector diversification. Here top 3 sectors contributes to more than 50% and fund is definitely overweight on financial sector, and therefore we give this parameter a yellow star too. Next are expenses. Expense ratio of this fund is 2.16%, which is lesser than the average expense ratio of this category, that is around 2.5%, and hence deserves a green star. Now those who like numbers, let's discuss few important ratios too. Standard deviation, a measure of volatility and risk, is higher than benchmark and category, which means the fund takes higher risk compared to them. Beta 2 is a measure of risk and is also much higher than the category and again shows higher risk this fund is taking. Alpha, which measures a risk adjusted returns, so 6.6 alpha means it can perform 6.6% better than the benchmark. So unexpectedly, even by taking much higher risk, it is showing alpha lesser than the category. So this means this fund has higher risk and low return profile, which doesn't look good. Last is P ratio of the portfolio, which is 20.5 and is much lesser than the benchmark NSE 500 index P ratio of 27.1, and it shows its propensity to choose lower P stocks and also its large cap bias, which have lower P multiple. So even with large cap bias, fund's higher risk profile than category and benchmark doesn't look good. And over that, it is generating lower alpha than the category, which creates a case for red star on this parameter. Few other important info to note about the fund is that it is currently a large cap focused fund and hence has 78% investment in large caps and rest in mid cap and small caps. And this table shows how rupees 10,000 SIP would have performed in various time frames and prove the decently good performance this fund has given continuously. So if we calculate, we got total 4 green stars and 5 yellow stars and 1 red star, with higher risk and lower return profile being the biggest concern. To summarize, HDFC TaxSaver is a higher risk fund in the ELSS category, even though its current focus is on large cap oriented stocks. It is a large ELSS fund and must be very popular looking at its asset under management, but in terms of performance, fund has delivered a patchy returns in last 10 years. Some of the years are pretty good and some very bad. Though it has consistently managed to stay ahead of benchmark, sluggish returns with respect to category average is worrisome. Its lower P than the benchmark shows its tilt towards low P stocks in an expensive market, which could be a risky strategy too. It was a heavily mid-cap tilted fund until 2012, but has taken an overweight position in large cap stocks in last few years. Fund is managed by Vinay Kulkarni, who is an experienced fund manager, but his overall performance, including other fund he manages, is pretty average. So overall fund's returns are not too bad, but average performance of fund manager in last few years and high risk and low alpha portfolio doesn't seem to be a good news for the fund in short time period. So that is all on this fund review. If you have any question, please do write in the comment section below. Have a great time ahead.